careers in about maybe 15 seconds. So welcome to the YouTube viewers, and we'll give the Covalent Careers crew a chance to catch up with us.
Have 15 seconds to refill their coffee and top off their beverage.
Exactly.
Exactly. There you go.
Reheat an extra burrito, breakfast burrito, or something like that.
That's right. That's right. A lot of
Ready for
breakfast
the day.
burritos being heated up right now. So we're also live now on Covalent Careers. So welcome everybody at this point who's been following along. There's nothing that I enjoy more, and I think most people are interested, especially now more than ever before, and discussing finances, money, and how to survive really in this topsy-turvy economic environment. And I've got two good friends here, Adam Cmejla, CFP at Integrated Planning and Wealth Management. Adam, you've been at this for a long time. We've done a lot of these talks together, typically at Vision Expo. This is our first kind of virtual sort of webinar kind of thing together, although we've done other podcasts and stuff. But you have a good podcast as well, right? 2020 Money. Correct?
2020 Money. Yep. Just search 2020 Money, 2020, like as you refracted down to 2020, just search for that or head to our website. You can find the podcast there.
Yeah, so Adam is a wealth of knowledge, and so happy to have you. I've also got Dr. Aaron Neufeld, who many of you know as co-founder of ODs on Finance. Aaron's a practicing OD, of course, but many of you know him as from ODs on Finance, which has just start off as a Facebook group, of course, but now is like a full-fledged sort of optometry financial education company. You've got a book, which I read, which was great. And you've got a ton of members now at this point. So I was thinking to myself, man, there's two people I think are perfect for this talk, and you two are them. So thanks for joining us. Thanks, welcome. And I had a couple of questions prepared for you guys, honestly, to kind of try to lead this discussion. But quite honestly, and we were chatting before we went live, I was like, I'm looking at these questions, and some of them probably just don't even apply anymore. Things are changing so rapidly. I mean, I can't keep up. How are you guys keeping up? And what's new? What can you tell us?
Aaron, you want to?
Good.
Okay. Jim Rohn was Jim Rohn, not to be confused with Jim Rome, the sports talk guy, but Jim Rohn, the personal productivity guru, thought visionary leader. I had a great quote where he said, "Money isn't everything, but it's right up there with oxygen." And I think right now, as we all, and I get sick of these catchphrases and cliche phrases like unprecedented times and uncertain times. But the fact of the matter is that's kind of what we're in right now, right? There's no blueprint for this. And in these times right now, whether, personally or professionally, regardless of whether you are on the employee side or the employee side of things, the decisions that you're making with your money have become amplified, and the consequences, good and bad, of those decisions are thus also being amplified. So I appreciate the opportunity to be on here and just answer some questions, give some clarity, provide some updates as to what we're seeing and how we're talking to clients around the country. We serve clients in 23 states. So both the conversations interacting with our individual relationships, as well as conversations that Aaron and I have had on ODs on Finance. I'm really grateful to be here to share this information with you.
Yeah, and for those of you watching too, by the way, please ask as many questions as you'd like. You'll see a link if you're watching on Covalent Careers. You'll see a link to jump into YouTube. Just hop over into YouTube, and you can type your questions there. I'll be kind of fielding them and handing them off to you guys, Adam and Aaron. And for those of you obviously watching with us in YouTube, you can just obviously type in the chat any question you got. So, Aaron, any thoughts on your end?
Yeah, right now, it's a volatile time. Things are constantly changing. Every day we're logging on, we're seeing different news reports, whether it be on finances, public health, anything like that. So it's just something that we have to keep an eye on, just like Adam was saying, we're just keeping up with the news, trying to keep everyone informed. So it's a different time, but we're going to get through it. And these webinars, different things like this, that's what helps everyone get through it.
Yeah, for sure. Yeah, for sure.
It's interesting. I mean, we were talking just about what's changed. I mean, and technically it's not law yet, but it was passed in the Senate late last night. The House is expected to sign it today. President Trump has indicated he'll basically sign at the moment it hits his desk, which is basically another, I don't know that it officially has a name yet. It's not put into law yet, but like CARES 2.0 is kind of what I'm envisioning, like what this is going to be. The structural framework of CARES is still in place. It's basically just an additional appropriations bill to allocate additional funding into, most specifically, the flagship, if you will, program that was talked about as part of CARES, which is the Paycheck Protection Program, to allocate an additional, I think it was $350 billion. That's what was passed in the Senate. We'll see if that holds through the House, to help, again, replenish the coffers of PPP. I've scrubbed onto more webinars than I care to admit. I've read and consumed more content than I care to admit around PPP. And I know Aaron and I could sit here today and opine on what we need to do and what we need to think about going forward. But as we were talking about before we hit record, the only thing that's constant in life right now is change. And so my recommendation, my encouragement to all of these listening right now is to take the information that we're getting right now with a grain of salt, in that quite literally by the time that we're done with this webinar, we could have information change. As we know it right now, the thing that was kind of frustrating, for lack of a better word, was, you know, as we look at the topic of this conversation, W-2 versus 1099, it was kind of frustrating and disheartening to see 1099 independent contractors basically kind of get hung out to dry on the first round of PPP funding, right? Because 1099s weren't able to apply until a week after, right? It went live April 3rd, and then they weren't able to apply until April 10th. Well, by that time, all banks, I mean, there were hundreds of thousands of applications already in queue. And so there's been some points of clarity. There have been some additional guardrails, if you will, that have been put around the second round of funding to ensure that it is allocated and appropriated more in alignment with what the original intent of the act was supposed to be. But again, take that with a grain of salt, because the other part that I know is consuming a lot of people's mind, and this is more so on the employer's side of things, is what do we do about forgiveness? And I would just really encourage you, as you think about how you calculate that and how you think about that, realize that even in the midst of what we're going through right now, still the greatest limiting resource and the greatest commoditized resource that we all have is the 168 hours per week that we get. And I personally have succumbed to this, where I've driven myself crazy, borderline, trying to figure out every single way in which the interpretation of forgiveness is going to be calculated. There has been 3 rounds of guidance that has officially come out, 1 by Treasury, 2 by SBA, and we really haven't even gotten into the nitty-gritty details on how forgiveness is going to happen. So I guess I'll wrap up this brief little monologue here with, take what we're getting right now, even with the second round of funding, as it pertains to the Paycheck Protection Program and the forgiveness side of things, take it with a grain of salt. I'm not saying that it's not going to be forgiven. I'm just saying that, like, I don't want that may sound really bad. It is going to be forgiven. How and to what extent it's going to be forgiven, there's still contradicting language in the bill. There's the use of the words and versus or, which have some pretty massive implications. Like, there's still a lot of guidance that's needed. So take the information on a just-in-time processing right now and realize that you have to be in control of the things that you can control right now, and just be at peace with the things that we don't have official guidance on yet, and know that we will eventually figure out what that looks like. And the other thing to that point is, whether you are an employer or you're a 1099 contractor that gets PPP funding, just keep meticulous records. I can't emphasize that enough, to make sure that you're documenting appropriately where the funds came from. I've even heard, and there's contradictory things, there's 2 different viewpoints on this. I'm of the opinion that this does make sense, to even go ahead and set up an extra checking account or a separate checking account in your business to receive the funds of PPP, or at the very least, it gets dropped into your operational account that you have. Take that exact transfer and put it into another account. That way you have an easy, reconcilable transaction history of what happened with those funds in the PPP, because the documentation is going to be extremely important as we kind of turn over the next rock, if you will, or the next dominoes fall in this program as it pertains to forgiveness. So that was a lot. I know, I'll apologize. I got on a soapbox there a little bit there, but let me take a breath and a sip of coffee and see if Aaron has any additional thoughts.
Yeah, jumping off of what Adam said, PPP, there's a ton of confusion around it. The language is obviously confusing. We've had a lot of conversations, both email, on the phone, with other ODs, where, they either got the funding, they're like, hey, what do I do with this? How do I record this? How do I allocate? the money to different sections of my business, and others that are still waiting for the funding and wondering, hey, what do I do with this? So, the key thing is just, it's what Adam said, just keep meticulous records. It's just like what we do in optometry, with all of our patients, we're keeping records. We can always refer back, because when push comes to shove, and we might have to give some of the money back, but hey, it was there in the first place. You were able to run your business. You're able to at least have some sort of cash flow to keep that business going. So that's definitely a positive. And one
Yeah,
other thing about the new PPP that's supposedly going to be signed into effect, I think today or tomorrow, I believe they were saying that about 100 billion might be allocated to businesses that don't have a relationship with a big bank. And so that is going to really help out. If that's true, then that's going to help out a lot of ODs. I know that a lot got kind of, put out to dry because of that, because they didn't have a relationship with the bank that was able to get them that PPP loan application. So something to consider there too.
yeah, great advice and insight, both you guys. And I know there's a question that came in. So there's two questions that came in actually. So I'll field one question here, and then I think the second question leads into a whole entire additional discussion on this topic around student loans and repayments. So before we hop into that, we've got a question here, just in general. What tips do you have for finding a good accountant other than local recommendations and, word of mouth? Are there any other places to go?
Yeah, on our end, on ODs on Finance, we do have a few vetted optometry related CPAs. So you can go on the website if you want to, or Antonio, I can give you those names later on. You can post those somewhere on
Yeah,
Video Link Careers.
awesome.
But yeah, they're nationwide. So I believe one is based out of Seattle, the other is based out of Hawaii, but they help ODs nationwide. Another thing is just to ask, go to the local society, ask optometrists there who they're using, who's good local. That'd be my other recommendation.
Yeah, and I think, and to add on that, that's what I was going to recommend as well, to check out ODs on Finance. They have a couple of vetted ODs. I have relationships with both of them as well, and it's good to find an accountant that understands the business of optometry. You have to decide as to how involved and how extensive you want that accountant to be in helping you understand the financials of your practice. I've worked with accountants that go as far. I mean, I have one accountant that I've worked with that is ridiculously awesome in the advice that he gives her, our mutual client, on running her practice. On what do the numbers mean? How do we make financial and business decisions based off the numbers? How do we make personal financial planning decisions based off of what the business is telling us? And then I know other accountants that are basically just storytellers. They just take the numbers from the business, throw them onto a 1040 or an 1120 and a 1065 or whatever the practice is structured as, and like, oh, here you go. This is what happened last year, with no additional guidance, no advice. Obviously, that's not the type of accountant that you're looking to work with. So check out ODs on Finance, especially if you're a practice owner. You want someone that can help you drive business decisions based off what the numbers of your practice are telling you, and be collaborative with other resources in your network. I operate on the principle of, I either want to be a fixer for a client or a facilitator of an introduction to another relationship or a collaborator with them. So, but to your point, Aaron, call your friends locally that are happy, that are also ODs. Talk to your local association, your local society, get those names as well.
Yeah, thanks for the insight. And we can drop in those links, Aaron, that you had mentioned, Adam as well. So we'll drop those in if you forward them along, and we're happy to, drop them in the chat too. Afterwards for those who are watching. We can put them in the description of this video as well. Gearing up for the next couple of questions that came in, and I think this is probably an entire topic in and of itself, around, a subtopic of this topic is that, what about students and student loans? So, question came in, two questions. Can you guys give us some insight on what new grads need to know about loan repayments and how you may expect it to play out in the next year? And then a follow-up question, can students expect next year's student loan interest rates to be lower since the Fed funds rate is lower? So any insight in and of itself, I mean, we could start broad and kind of get into all these other questions, but I think there's a lot to probably talk about as far as student loans go and repayments and ideas and strategies.
Yeah, so I think the overarching theme on this, regardless of what we're going through whenever it comes to student loans, is proactive always outweighs reactive, right? So you can't just pretend that things are going to go away, or that the normal way of paying them back was still the best way. Part of what CARES did is it allowed people to defer their student loan payments up through the end of September of 2019. Now, new grads coming out, again, that really doesn't help, so to speak, because you're automatically granted that deferral period there anyway. What is going to be interesting, and I don't believe, I personally haven't seen any clarification on this, so this is a good point that I can follow up with and provide some additional information to see. You're automatically granted that 6-month deferment period. And Aaron, if you've seen something on this, obviously feel free to chime in as well, but you're granted that automatic 6-month deferral period on your student loans once you graduate, but it's not like the interest stops, right? The interest is still accruing, the interest is still capitalizing, which is important because it's just adding to the balance, right? I always joke with ODs that Christmas is extra special the first year that you graduate, because that's the first month in which you're having to make your student loan payments. So if you opt for, if you call your servicer, right? If you call your service provider now and ask for forgiveness, excuse me, not forgiveness, ask for deferral on your student loans, the CARES Act specifically stipulates that your payments are going to be deferred, but more importantly, the interest that's going to be assessed does not compound. What that means is that interest still accrues, but it kind of is in a separate coffer over here. It's not interest compounding on top of interest. So that snowball, that interest snowball, if you will, is not capitalizing on your balance. That, to my knowledge, I've heard, again, people have said both sides of it. I've had clients that have called and said some service providers are automatically doing that. Others have said, no, I had to call, and then they said they would do that, but I still had to call and confirm. Again, be proactive in that. Call your service provider and say that you want the deferment on your payments until September 30th, thus making sure that your interest does not capitalize. It'll still accrue, but it doesn't capitalize. Aaron, have you seen anything? Have you as it pertains to new grads right now, and what that normal deferment period means in relation to the 6 months?
That's a good point. That what you said is pretty much what I know as well. So I haven't seen anything else. Yeah.
Okay. As far as interest rates going down, I doubt it, to be quite honest. And here's why I say that. Congress could have done that years ago. I mean, the Fed funds rate had been at 0 to 25 basis points. Let's emphasize what the Fed funds rate is, just to kind of, the Fed funds rate, when we see, oh, the Fed dropped the interest rate to 0, or it's at 25 basis points. The Fed funds rate is the rate that banks use on overnight interbank loans to one another. Every bank has to have certain capital requirements on hand to meet and basically stress test, if you will, the amount of outstanding liabilities that are on their balance sheet. And so if for some reason, again, deposits, inflows, et cetera, change on a minute to minute, hour to hour basis, banks will lend money to each other overnight. And that Fed funds rate is what banks get as an interest rate in order to lend money to them. It's not directly related to either mortgage interest rates or student loan interest rates. It has a ripple effect, but it's not a direct correlation to that. So, because we've seen that in the past, right? We've seen where the Fed funds rate has been at 0, basically in the wake of the financial crisis for years. After that, as we recovered over the last 10, 12 years from the great financial crisis, but yet student loan interest rates, everybody, if they open up their Nelnet or their direct loans payment, is seeing 6.8. Is it possible? Yes. Is it probable? I don't want to be a negative Nancy, but no.
Yeah, I agree.
Yeah, what does, so I'd like to know what, a lot of the discussion that you're seeing going on. I can only imagine how many notifications you wake up to every morning, Aaron. So, I'd like to know kind of what the most common questions you're getting are right now are. But before we do that, I mean, if for those students that are graduating this year, I know we always talk about some of those loan repayment strategies and kind of financial strategies. And Adam, you've spoken many, many times with us, like I said, going back to Expo on these, on different strategies, and you've written a lot of guides, and you have too, Aaron. But, does that strategy look any different now this year because of what's going on? And, we don't have to get into the whole job market thing, but jobs look a lot different probably this year for many, new grads, especially than they did last year. So, considering some of the changes in the job market too, does that influence kind of that whole, maybe this strategy is better now relative to, well, there's 3 strategies and all 3 strategies have pros and cons. I mean, what are your thoughts?
Yeah, the strategies, they're still good. They still have some basis, but you got to consider what your personal cash flow is, what your situation is. If you don't have the money, if you're not making money, you're on unemployment, different things like that, where your income drastically decreased, or things like that, then definitely you want to consider probably saving a little bit more, still making payments, but not as much as you would before, because your well-being's more important than getting this debt out of the way. But once you're back on track, once coronavirus, blows over and we're kind of back into the swing of things, then definitely pick up one of those strategies, whether it be the snowball method, the avalanche method, whatever you want to do in terms of tackling your debt. But be smart about it. Look at your personal finances, make sure you got that emergency fund, make sure you got enough money to feed yourself, feed your family, pay rent, and look at those loans and see how you can tackle them afterwards.
Yeah, and Adam, you talk a lot about lifestyle creep. That's something that you speak often about. I mean, now is probably more important than ever before not to get caught, right? So can you speak a little bit about that for those that might not be familiar with that term?
Yeah, so lifestyle creep is basically this idea, and I understand. Again, I'm married to an OD, right? So and I've been with Andrea since undergrad, so I know secondhand, if you will, what it takes to go through optometry school and the sacrifices, time, money, and energy that go into your career. And when you come out on the other side, you look at, I mean, I joke, most ODs, in a normally employed position will make more in their first month than they were asked to live on for an entire semester sometimes. So it's kind of that reverse sticker shock of what they make. And there can be an immediate correlation, or not correlation, but an immediate feeling of, I've made it, right? Now I can afford to buy all these things. And I joke, with three strokes of a pen, you can find yourself in $1 million in debt, right? You go out and start a practice, you have your student loans, and then you over leverage yourself on a house, and then you throw a car on top of that. And then you want to take those couple of vacations that you've always been putting off because you've been in optometry school and in a residency, and right? That's that lifestyle creep that I'm talking about. And so I am a big cash is king advocate. I think there's a balance in paying off your student loans. Again, I know it's a cliche phrase, and ODs hate it when I say this, because it's not, I'm doing it not to deflect the question, but it does depend on everybody's situation as to what type of strategy you use to pay off your student loans. But right now, more than ever, cash is king. And so the less people that you owe money to on a monthly basis, the better off you're going to be. Conversations, I have a couple of practices that, quite honestly, I don't know if they're going to make it through this, even with PPP, even with that funding, because they've over leveraged the heck out of their business and their personal life. And so when you look at a practice that becomes successful, and the owner of the practice continues to not only take the W-2 wages that they've made, but then they take the shareholder distribution, the partnership distributions, right? And use that to fund a lifestyle that has crept up because, for whatever reason, they feel that they need to do that. There's no delta there, right? There's no barrier to plan for these rainy days. And so what's the phrase from I think Warren Buffett said it's best, when a tide goes out, that's when we find out who got caught with their pants down. Right. From an investing standpoint and from a cash flow standpoint, this is when we're going to find which practices were well capitalized, which practices were over leveraged. The investing phrase, he who understands leverage doesn't use it, he who doesn't abuses it. And so now more than ever, manage your cash flow, get on a written budget. See, Courtney's mad at me right now because I'm talking about, I don't know if you can hear the 2-year-old in the background. She's like, no more ice cream, no more treats. Daddy's closing the ice cream.
That's it. That's right. You want to get stuck in that lifestyle creep.
Exactly.
Once you start buying those ice creams, you just add up.
She's mad at me. She heard budget cuts and now she's not thrilled. I'll wrap up with this. And we did a podcast with a couple of ODs that have just gotten insanely aggressive at paying off. I think it was just over 600,000 in combined student loans. They're both ODs up in Minnesota. That podcast is going to be coming out here, in short order. I don't have an official release date yet, but we talked in that episode about how a budget gets a really bad rap, on how people don't like the word budget until you do it, and then you realize how empowering and a sense of control that you have. And so I would just encourage any OD that's listening right now, whether you're a new grad, getting ready to come out, maybe you're already graduated, and you're kind of trying to find your feet again after maybe getting furloughed or laid off and figure out what that next move is, or you're an experienced OD, you run a practice and you're looking to hire, like, if you've never done a budget before, or you've never written and stuck to a budget, there's an incredible sense of empowerment that happens when you're in a position of telling your money where to go, as opposed to you reactively looking to see where it went.
Yeah, I got 3 questions that kind of came in while you guys were speaking. So the first question is should new grads call their servicers to ask about the interest rate deferment due to COVID to stop them from compounding? Apologies, I may have misunderstood.
Yes. The short answer is yes, that the person that answered that question, do exactly as your question stated.
That's correct.
Okay.
Yep.
That was easy enough, right? The other question that came in was, you had mentioned that interest capitalizes on loans automatically. I thought federal student loans don't capitalize until the repayment period starts after the 6-month grace period. Am I correct on that?
You are correct on that. You are correct on that. My point in saying that was more geared towards if you're already in payment mode. If you're an OD listening and already in payment mode, I apologize for either misspeaking there or not being clear on the differences between those things.
Yeah, and then another question came in, and can we get the link for the upcoming podcast? So I don't know if you want to share that with me, Adam, or not. I can add that link in the chat or in the description of this video.
So 2 things, and this is, I'll do it in the best way that I can without coming off as a shameless plug, though I guess there's no way to do it. The best way to get the link is to subscribe to the podcast. So find the podcast, 2020 Money, go ahead and subscribe. New episodes come out every single Monday morning around 7 a.m. Eastern time. The reason that, the reason that I don't know when I'm going to release a podcast is because I have about, I think it's 8 to 10 episodes in queue that are more geared towards like practice management and running optometry practice in quote unquote a normal environment. And I just don't want to be insensitive to what we're going through right now. Like now would probably not be the best time to release a podcast on how to implement a dry eye clinic into your practice. Like that's not top of mind for a practice owner right now. So that is one of the episodes that I have in queue. So I don't know exactly when that's going to be released. At the very least, Antonio, I'll make sure I send you the link, though I know you already subscribed to the podcast. So you probably
you better believe it. Yeah, I've been on the podcast. It's a great podcast.
Have a number of times.
Yeah, definitely. So for those of you who aren't subscribers, definitely subscribe. The whole wealth of information there, and you can catch me in an episode too. I'm sure everyone just loves listening to me talk, for the last yesterday and all day today. But so for sure, I know there's another question that came in here. And the question is when do you think optometry offices will start opening up again? I'm sure that really none of us could put an absolute date on that, but the main concern is as a 4th year, I'm worried that if our current situation continues up and through September, I'm worried I might be, have to default on my loan. So, what do you guys think? What kind of advice do you have? And what are your thoughts?
Yeah, that is an interesting question. That's the $1 million question. When is everything going to get back to normal? And, even when things start to open up, it's going to be different. That's, it's a topic that we've talked about a lot. There's going to be a lot of protective measures put into place. We're not going to be seeing patients as frequently. There's all these different things that involve contactless, delivery and contactless, kind of engagement with patients. So that's something to consider. Yeah, it's going to be different being a 4th year coming out of school. It's the job market's going to be strange. Cash flow isn't going to be the same as it was before with these practices. So I would say just keep looking, try to find a job, try to secure a job if you can. And, if there is this period where you can't find any sort of employment, look to other means. There's a lot of different side gigs that you can do. There's, you can go online, you can give webinars, you can write blogs, you can do all this stuff just to get your feet wet, just to get you going. So, but it's definitely an uncertain time. Using the cliche again, but that's true.
And I know we're all looking for that. Here's the date that things are going to go back to normal, right? Human beings as intellectual beings, we love to know 2 things, or we love 2 things. We love to have control and we love a sense of certainty. And right now we have neither of those things. And that's what makes the decisions that we're making in multiple different ways, right? Professionally, personally, and the common denominator there financially, difficult. I don't know how to sugarcoat it, or I'm not going to sugarcoat it, right? As Aaron said, it's not good right now. And things will get better, but we just don't know when that's going to happen. So to what Aaron said, this is where the important thing that you can, right back to what I talked about in the beginning, recognize what you can control and what you can't control. We can't control the proliferation of this virus, when and how optometry practices are going to open. Again, ODs from a clinical standpoint are much more in tune with this than I am. There have been ODs that have said we shut down too aggressively and too, we took the definition of routine eye exams too far. And now what happens with ODs that are patients that maybe did have some sight compromising issues that quote unquote weren't emergent, so they're not being seen to monitor the things obviously that you as clinicians know that I pretend to know sometimes. Just in hearing background conversations.
You count too, it counts.
Yeah, I do.
You've been around enough.
You've been around. Yeah, you've been with one long enough. It counts. Yeah, I mean, I don't have much more to add. Yeah, you both are right. I mean, it's hard to say. I don't know what particular location the person asking the question is located. There are a couple of companies that are still hiring. So it is definitely worth checking out maybe some opportunities in your area. We actually have a talk right after this on the hour, I think. So in about 15 minutes or so, about who's hiring now, all dedicated to kind of this discussion. So if you're still here listening to us talking right now, jump into that talk with us right as soon as this one's over, and we can give you some more insight into that. But
and the other thing that I was going to say as well, Antonio, if I can chime in here, and I was trying to look up exactly what episode it was. I had Dr. Nisha Blender on the podcast. She was, I'm going to try and, basically she is a medical science liaison for ocular therapeutics. A traditionally outside the box, right, optometric, or a job for an optometrist, right? She's no longer patient facing. She's still involved on the science side of things, obviously, but it is more of a liaison, quite literally in her job title, from what ocular therapeutics is doing and disseminating and sharing and educating that information with ODs that are on the front lines right now. So I know back when I had her on, they were looking for ODs to work. So I don't know what they're, candidly, again, I'm trying to find out what episode that was. Again, check out the show to find that episode. Yeah. I'm going to say it was, anyway, you can hear her there, episode 66. So integratedpwm.com/66 is where you can check out that episode, get an understanding as to what a day in the life of looked like for Nisha, and all that to say, this, necessity is a mother of all innovation, right? And so if you had plans for what you wanted to do after graduation, and those plans don't exist right now, you have two decisions. You can either continue to fight an uphill battle and go against the current, or we can pivot and try and figure out how do we make the best of the situation right now in the short term. And that doesn't mean that you have to give up on what you had originally planned, but you can run two parallel tracks, right? Do what you need to do right now while not negating and abandoning what you had originally wanted on your professional career.
Yeah, that's great advice. Adam, thanks for sharing that. I know, we've got about 7 minutes or so left, and a couple of other questions kind of came in. So I'm going to field these ones over to you guys. So a question that came up was, how do you think this will affect practices looking for doctors to buy in? I'm sure that is a loaded question.
Yeah, it's definitely going to affect practices looking to buy in. That's been a question we get at least 2 to 3 times a day on ODs on finance. Both ODs that are looking to buy in and ODs that are looking to sell. It's what's this whole crisis going to do to that? And once again, it's completely, for most ODs, it's stop business. So the books look completely different than they did year after year, because you've got this 1.5 month gap of just nothingness. So it's really going to affect both sides. I mean, there's a lot of ODs that are kind of looking to panic sell right now because, like Adam was saying earlier, they were over leveraged. They want to get out of the situation. So there's going to be some opportunities, but as a buyer, you got to purchase opportunities with a little bit of caution, because you got to realize what the circumstances are around that, why you're getting such a good deal. So it goes both ways. Definitely exercise caution, do your due diligence, but it's a possibility that you could find a good deal, or it could be disguised. It could really be a bad deal. So.
Well, and I think the important thing to understand as you're evaluating deals is look at the margins of the practice, right? It can be sometimes it's not what you make, it's what you keep. And so, yes, from a valuation standpoint, we're just not quite sure what this is going to look like. Private equity has all but put things on hold right now, because that's also a factor that plays into this equation, right? If for ODs out there that are looking to buy into practices, and I know we're coming up on the top of the hour here, I want to be sensitive to time. We could go on and do an entire episode on this alone.
I know.
But there's an interesting quagmire that's happening, because you're having doctors out there that have been in practice for 20, 25, 30 years, that when you look at, again, we all know the very generalized estimate of a practice, okay, 60% of gross receipts, right? Gross collections, 60, 65 maybe. And then you're finding private equity come along and paying 100 to 110% of gross collections. If you're a selling doctor, right, you're talking, that's a pretty big delta, right? You take $1 million practice or a $1.5 million practice, and you go 60% to 100%, like that's real money with six figures involved in that equation. So buying in ODs, looking to buy from a succession plan standpoint, we're potentially already fighting an uphill battle. Again, private equity is still very, very geographic specific, right? It's not like they're across the country. There's still pockets of private equity, and there's by and large a large swath of the country that is not involved in private equity right now, or private equity, I should say, hasn't found their way, if you will, into those geographic areas. So we're not quite sure. Again, I want to create kind of line of demarcation there between how we're comparing the valuation of a practice and the players involved in that equation. But the other side of that is, we don't know necessarily what top line receipts are going to look like, but regardless, we still can look at what trailing revenue has been and what the margins of that practice is. And to that extent, the valuation of a practice where the margins are much less because it's been over leveraged and a lot of the money is going towards debt repayment, makes it not as attractive, obviously, as a practice that's run very lean, where cash flow is very healthy, where net profitability is relatively high. Just in normal situations, that is a much more enticing practice. In these types of situations, it is ever more important. So for buying in ODs, make sure that you're understanding, don't just pay attention to the profit loss statement, make sure you pay really good attention to what your balance sheet is. Courtney agrees with me.
Yeah. Yeah. The last couple questions that came in, and man, these are loaded questions, probably deserve really hour-long discussions in and of themselves, but maybe you guys have some resources you can direct some of these folks to. So, one question was about kind of filing taxes around independent contractor for doing work, for social media, that kind of thing, side projects. So filing taxes in that regard. Another question was around, would you recommend looking for a job as a W-2 versus 1099 right now? So those kind of similar. And then the last question that I'll throw at you guys just to kind of think about was, and this one's super tough. I don't know if if you guys have any answers to this one, but the question was I'm about to graduate and my parents claimed me on their taxes, but never received the additional reimbursement from the government, I guess that coincides with one of the acts. Is there any idea on who I can contact about this? That's a tough one.
Yeah.
For
I
that
really don't
last
know.
one, I assume they're meaning the stimulus check, but
That's what I'm thinking. Yes. Yeah. So
I would, you could try getting with a local accountant, or if that's, I don't know who else you'd call. Yeah.
Well, but the thing in the stimulus is that it was only given if mom and dad were only getting money for you if you had kids at home that were under the age of 17. So just because you were a dependent on their tax return does not mean that mom and dad were getting the $500. You should be getting that, even though you were dependent on their tax return. So they're only getting that because they would only get the additional $500 if they were a dependent and are in the age of 17. Absent of that, if you haven't received that stimulus check, that's where we're waiting for IRS. I mean, people had started getting direct deposits, but I would say continue, and it's going to go to the address. The check that will be sent out to you will go to the address of record that is on 2018's tax return, or if you've already filed 2019's tax return, it'll go on 2019's. Now that can be a challenge for ODs because from year to year, you may move from one apartment to another or move back home for rotations or whatever that may be. So as if it wasn't chaotic and crazy enough, then you throw a mobile lifestyle on top of that. That's going to be the best thing. There is a form that you can file. It's It's Form 8822, which is a change of address form with the IRS, but it's a paper form. In normal times, they say 4 to 6 weeks to process. It's not like it's going to get processed.
Right.
Exactly.
Yeah, maybe for some of those questions around 1099 versus W2, I know we're kind of hitting the last minute here, but I mean, any resources that you guys would recommend for just kind of getting information on that stuff?
Aaron, do you have something that you want to say?
1099 versus W2. I would want just more info on what's going on in that situation. Why would you want, a W2 versus a 1099? What kind of work are you doing? That would be my thing.
Purely from a tax standpoint, interestingly enough, I know this is going to sound kind of weird for someone to say, because I think people usually think of being 1099 as getting the short end of the stick. Right now, 1099 status is actually more advantageous for a couple of reasons. Number one, it gives you more flexibility on tax liability that you have to pay, right? Self-employed, the whole 1099, the biggest difference between the two is the self-employment tax, so to speak, is the 7.65% that your employer would otherwise pay for Social Security and Medicare. You, as the self-employed individual, have to pay that additional 7.65%. So hence where the self-employment tax comes from. Interesting part of the CARES Act is that self-employed individuals are also able to defer paying that 7.65% tax, effective basically for any wages earned from March 12th, I believe it's March 12th, through the end of the year 2020. You can pay that liability. 50% is due by December 31st, 2021, and the other 50% is due December 31st, 2022. So push comes to shove, from a cash flow standpoint, if you need to defer those taxes, you can defer that. Independent contractors are able to do that. The other benefit that being an independent contractor right now over W-2 is something that was put into place back in 2017 called the 199A deduction, which allows you to take a 20% deduction on any type of what's called QBI, qualified business income. 1099 income does qualify for that, assuming that you're under the thresholds. And again, I can, Antonio, I can share 2 links with you that I mean, we did one for new grad optometry.
Mm-hmm.
You can post that link. The title of that article was "Don't Find Yourself in 1099 Hell."
Yep, I remember the image our graphic designer created. Is my
he did a
favorite
great
image
job
to this day. Yeah, it was amazing. Yeah,
and it's
yeah,
one of the most
definitely.
popular posts, I think, on
Definitely
one of the more popular finance posts on the site. So because
absolutely
I did emphasize that, or redo that one to include Tax Cuts and Jobs Act. So go reference that on newgradoptometry.com. or covalentcareers.com.
Yep, appreciate it. Yeah, if you guys send any links or resources, I'll happy to put them in the description. Once again, check out ODs on Finance on Facebook, and then 2020 Money podcast. Aaron, Adam, you guys are a wealth of knowledge and information. Thanks so much for your time today, and I'm sure we'll keep in touch here soon.
Yeah, thanks for having us.
The only thing that's constant is change right now. And,
that's
and with
right.
that change, we'll be here providing information as we can to the OD community. So thank you again for having me, Antonio. Appreciate it.
You got it. Yep. And for those following along, we're going to be sticking in the education lobby, talking about jobs and companies that are hiring right now. So stay tuned. We're going to kind of start up in about 3 minutes or so. So see you guys there. Have a good one, you guys.
All right. Thank you.
Bye.